Thank you very much, Laszlo, and great to be here, back in Brussels, and thanks everybody for coming out today. As Laszlo said, I manage a team of analysts in our group GSMA Intelligence. As part of our remit, we cover all regions of the world in the telecoms and TMT sectors, Europe being one of the most vibrant. And so what I want to do today is run through some of the key findings and implications from our latest state of the industry, the mobile economy in Europe, and really relate that to some of the challenges I think we've all been talking about and that the panel will address afterwards. I'll talk for around 20 minutes or so, going through the findings of the report, and mix that between sort of industry performance, how we're looking at network investments, and the financial side of things. We'll talk about the energy markets and the transition to net zero. Clearly, this is a topical issue for many reasons today, and how that impacts the sector and how the sector can alleviate some of these pressures. And then briefly touch on public policy. As Laszlo said, very open to taking questions at the end, so feel free to ask those. I think, let's scene set to start off here. When you look at Europe, Europe is one of the more vibrant digital societies in the world, the countries of Europe. What we're showing here is a sort of timeline of major statistics in the industry, which give you a sense for technology adoption trends, how quickly that is changing, and where there's still gaps. So if you look at now, here we are in 2022, 5G penetration is between 5 and 10% across most of the continent. That's despite smartphone penetration being much higher, 5G is still relatively in the sort of take-up phase. There is variation in that. When you look ahead to 2025, that will grow significantly, and you'll see multiples of adoption there, where you get to over 300 million 5G connections. But despite that sort of pattern and smartphone adoption being ubiquitous, Europe does trail the United States and other higher income markets in Asia, China, Japan, Korea, where 5G adoption levels are well above 20% now. And we'll talk about some of the reasons for that, but much comes down to the infrastructure investment and the coverage levels, which are generally lower in Europe compared to some of those other regions. But what does this set the stage for? Well, when we look in the 5G era, it's not just traditional telecoms. There's a big story in enterprise digitization, in manufacturing and transportation, in healthcare, in buildings and others. The mobile industry can play a very key enabling role, and there's a financial implication to that as well. The transition to a sustainable market and economy is probably the most fundamental challenge of this decade. And then culminating in a sort of broader story of trying to regain technology leadership on a global scale. And we're starting to see evidence of that filter through today, but I think that's going to be a major priority, both for sort of operators themselves as well as policymakers. It's always helpful to look at how sort of the expanse of technology adoption looks in the round. So what we're showing here is the share of the mobile customer base that is using different levels of mobility generations. And you can see here that in 2021, 22, LTE is the predominant technology. Most people use LTE smartphones. 5G is on the rise and will reach just under 50% by 2025. 3G and 2G will be largely sunsetted, retiring and using those spectrum allocations for other purposes, although there will be some maintenance for example, IoT and M2M applications and some voice services. We're starting to see 5G adoption on the rise, and that's really coming from a post-COVID boost in demand and declining handset costs. But one point I want to make here is that the long-term story is really one of where 5G and LTE remain complementary to each other rather than necessarily replacing. We're starting to, early builds of 5G, we're working on sort of non-standalone network architecture. That means complementing LTE infrastructure. That will change to standalone as more of the enterprise story starts to take hold, but there is a coexistence in the long term. That's a regional level number. When we look at country level numbers, what we're showing here are our forecasts for 5G adoption in some of the leading countries in the world. You know, I've talked about Europe as an average, reaching around 45% by 2025. You can see the UK at the vanguard of among European countries, Germany and France a little bit behind it. But there is this position where, again, I talked about the US and what we call the CJK triangle, China, Japan, and Korea, being considerably further ahead. And that reflects a position of higher levels of network coverage, principally, as well as a preponderance of handsets at a lower cost of income. And so there are challenges to be made to bridge that gap, which has implications for not only the operator financial health, but for the services available to consumers and how quickly Europe transitions to a digital economy. I think it's also important to talk about sort of why consumers would upgrade. A lot of people talk about the promise of 5G, and of course that is true. But from our survey data, there is still a sense among some consumers that they need to see something new compared to what they already have. And this is both a challenge and an opportunity. It's a two-sided coin. When you look at the survey data, when you ask people why they don't intend to upgrade to 5G when it's available, the number one reason is simply, it's not that it's bad or has anything wrong with it, but they're satisfied with what they already have. You can see 45% of people in Europe, and that's the highest level of any global geography. Most phones support 5G, of course, as standard now. That's not an issue. Coverage is a bit of an issue, but that should grow. But really, this sort of what is new, what is genuinely there, and I think this is where we get into the metaverse. This is where we get into new content applications, and this is where, from a business standpoint, we get into new enterprise applications. That is a fundamental challenge for the industry about addressing that wow factor and communicating that, because perception is reality. And so expect to see much more in how this is positioned from a marketing and a product level. So we've talked about the sort of industry standpoint of a technology adoption in terms of smartphone penetration, 5G penetration, and where it goes in terms of internet access rates. We are living in a world of uncertainty. There's no doubt about that. Clearly, the pandemic was the largest example of that in recent history, which affected, of course, all industries and all people. But we've now transitioned also to where we have a live war happening, which has real consequences, obviously on a humanitarian level, as well as in terms of filtering through ripple effects through the energy markets. So when you look at the mobile operator revenue growth in Europe, it's been a bit of a choppy ride. But the point I want to make here is that there is resilience starting to feed through post-COVID after a dip. So pre-pandemic, here's 2018, 2019, the average growth was between sort of 1.5 and 2%. Again, lower than some of the other peer countries I mentioned before, but reasonably steady. COVID took about 4 to 8 percentage points off revenue growth on average, which is why you see the dips. But now we're starting to see that recovery start to feed through here, albeit with some country variation. You see Spain having sort of responded quite nicely, France. Italy still somewhat languishing in negative territory as a result of several factors. But there's been price firming. We're starting to see people upgrading to 5G handsets as the price has come down and retail channels have come back online. Successful bundling efforts, a lot in gaming, other new applications that weren't possible or weren't as effective on an LTE medium. And then potentially early B2B success as operators start to sell private networks, slicing, other opportunities there to monetize the 5G infrastructure investments beyond just the consumer markets. So it is still relatively low growth, but it is growing, which is a real positive. And we think there is upside opportunity as you start to filter these through, particularly in the energy markets. I think, though, that when you get beyond the macro picture, you've got to bear in mind that the consumer pressures that people are facing across the continent are very real. What we're showing here is the inflation rates in some of the largest countries and what that means in terms of real income growth. You'll hear a lot about the labor markets being tight, record levels of employment, all of which is true. But when you have inflation running at sort of 10% on average, and wage growth failing to keep pace with that, most households have taken a pay cut in real terms. Now, there is some variation on this depending on the country that you look at and how exposed they are to import variations. Germany is one example, given its exposure to energy imports. But the common denominator is that there is pressure on household spend for all services. Now, mobile is essential and has been proven essential time and time again to a growing society, to a digital society, and a healthy society. And for all of those reasons, it's fairly inelastic. That means that as the price change, people still tend to stick with it. But the pressure here is really one of constraining upgrade volumes. So this is kind of a near-term headwind that everybody has to contend with, and should be factored into how we think about growth in the short term, like the next year, compared to the medium term, which is 4 or 5. So this is kind of a sequencing story that we need to look at. I'll talk about energy in some more detail in a minute, but that clearly is also another factor for how people think about their discretionary spend. Different governments are responding in different ways to try and mitigate the effects of rising energy prices, but the telecom sector is no different, and that has consequences in several contexts. It's a pretty clear story what's happened to wholesale electricity costs. Even before the war in Ukraine broke out, costs were on the rise. There was volatility in the wholesale markets. And then, of course, you've had a surge since then that has only partially abated. So let's talk about this on two levels. First, for the telecom sector. So energy is still around 20 to 40% of network operating expenditure on average. So that translates to around 10%, maybe a little bit higher, of total OPEX. So it's a significant cost line. When you factor in these price rises, some of it can be mitigated through hedging or forward contracts, but some of it cannot. And so this is putting more pressure on the cost line, which then has to be factored in against as you're growing up network investments, and overall just generally puts more pressure on the sector. Clearly, there are a number of possible implications for that. We talked about the household spending pressures already. There will be pressure on free cash flow, which is ultimately the driver of what enables network investments. But then you look at other potential consequences. We've all got to be mindful of energy usage, and we're seeing operators take a number of preemptive steps to lower energy usage in non-core areas. but it must be preserved for network access levels because these are absolutely foundational to effective running of countries. But you could have consequences in terms of the pace of infrastructure rollout, which compounds some of the challenges I talked about earlier. So really there is a need for a fast and quick acting, but ultimately sort of constructive approach to manage the energy crisis. And we're seeing a lot of that happen through these preemptive measures. But ultimately, it comes down to a transition to renewables. That is a long-term energy security point on a macro political level, as well as on an industry level. Which leads nicely into the conversation about net zero and this being a structural trend in the sector and indeed for economies overall. What we're showing here is the proportion of mobile operators by their subscriber share who have committed to various global level climate targets. There's been a lot of momentum of this leading up to last year's COP26 conference in Glasgow and the follow-on that will happen in Sharm el-Sheikh this year, COP27. This has firmly moved away from being something in the CSR domain to a core strategic priority for environmental reasons, primarily, as well as business reasons. Europe is the global leader in this space. There's no question, where the vast majorities are over 50% on the renewable energy consumption. Some are well above 90. And that most have set pathways towards carbon neutral and the ultimate goal of net zero by 2050. Some, Vodafone, Telia, others have actually put more aggressive glide paths in place so that they intend to hit net zero well before 2050. There are gaps in other parts of the world, mainly to the south and the east. But again, Europe is really showing quite a lot of global leadership here, which is very impressive. But it isn't just an environmental story, and I think this is a point that can be lost. Of course, it takes investment capital to make networks more efficient and overall operations more efficient, but there is, we think, quite a positive potential revenue story from going green. This is from some modeling we did around the telecom sector's ability to help other industries lower their carbon footprint rather than just lowering your own energy consumption. So I talked about previously, the operators making efforts to make their networks more efficient, to bring down that energy cost line as we move towards cloud-native networks. And that's starting to feed through, and it's a really positive story. But less appreciated is the potential growth you see from this enablement effect. And so when you look at these four industries, manufacturing, the power and utility sector, transportation, and buildings, they account for 80% of the world's CO2 emissions, which is around 50 gigatons a year in total. But what we found from our analysis is that the use of connectivity and digital technology can enable 40% of the CO2 savings required by 2030 to remain on course for net zero. Now, that's a really significant finding and significant figure because it plays to the enterprise B2B story that I talked about, and it's a win-win because people are lowering their carbon footprint and they're moving towards a digital operating model that 5G and other complementary technologies can enable. So this really is a good business story, as well as an environmental one. And when you relate that back to the telecoms industry in Europe, it's potentially a solution for a long-running challenge, which is that despite very significant capital investments year over year to fund the network expansions that a digital economy relies on, the incremental revenue growth has often been flat or even in negative territory. So you can see going back 20 years, as operators, this black line shows annual CapEx investments. There was a 3G investment, there was an LTE, 4G investment, and then most recently a 5G. That's what those peaks are. But the teal line, the turquoise line, not since the 3G era when you were adding people to the network has that really been in positive territory. And that has very real effects for the return on capital, the attractiveness of investment in the industry, and ultimately the long-term sustainable health of the sector. So there's a public policy dimension to this, and there's a revenue dimension to this. So where does that leave us? One of the foundational points we make in the Mobile Economy series for all regions, but for Europe in particular, is that the telecoms industry is a major driver of economic growth. It contributes around 4.5% of GDP in Europe on average, sometimes higher, sometimes a bit lower. And that equates to around 760 billion euros today when you add it all up. That comes through a direct contribution, but particularly it comes through indirect productivity gains that you have by infusing mobile technology throughout the economy. And you see that driver line continues to grow if you look out over the horizon to 2025, where you get an 11% growth in the economic contribution of this sector. So that's a really, really important story for policymakers to bear in mind in terms of how you foster the right conditions to enable further investment that ultimately underpins the services we know and love and will continue to rely on to transition towards digital. So it's a very significant driver in all respects. I've talked about the state of the industry. We've talked about the challenges from energy and the opportunities from energy. We've talked about other new revenue avenues. I want to close with some of the public policy priority areas that we've identified with our colleagues to prioritize in Europe to enable those conditions. Competition policy and ensuring there is the opportunity for sensible in-market consolidation to enable infrastructure investment and scale. Fairer spectrum licensing conditions. Too often we still see short durations and excessive fees. Again, that reduces the level of long-term certainty you have and require for this level of investment. There is still, in some instances, too much red tape to limit the pace of infrastructure rollout. Again, 5G coverage levels are on average around 50% in Europe compared to 95% in the US. That's a big gulf to close, and it's a really important one to enable a lot of the opportunities that I've talked about. Sharing equitably the costs of traffic growth with particularly high priority users of that. Another priority and a lot of logic and data evidence base behind that. And then of course supply chain diversity, particularly as we move into a world of open architecture networks and open RAN, and a lot of new entrants into the network equipment market that are doing things differently, and that I think operators are welcoming as it benefits choice, it benefits cost, but it doesn't compromise the infrastructure strategy and objectives that we've talked about. So I think the panel will probably go into more detail on some of these public policy messages. I will stop there. That runs through most of the things I wanted to talk about, but we've got a couple of minutes for questions, so there's a microphone here. Please fire away.
Hi there, Phil Mallock from Meta. Can you explain the term price firming? It's the first time I've heard that terminology used. Is that price rising or leveling? How do you define that?
Yeah, price firming typically means where you've had a marketplace that has had depressed pricing where that is increased to be more in line with the costs. So generally a rationalization of price and an increase, yeah. Yeah, and you see that some of that again, that will vary by country, but particularly where you have ultra-competitive marketplaces that perhaps have had competition or a certain entrant sort of move it downwards where it's been able to rebound. Any other questions from online or in the room? If we don't take them now, that's fine. We can take them after. Oh, apologies.
All right. Actually, I have two questions regarding the survey you have been done for your report. The first question is, it will be interesting to understand, how the consumers understand the sustainability issue, for instance, introduced by 5G, because that have been addressed for the previous technologies, for the 2G, 3G, 4G. But as you mentioned, the 5G played a key role towards the network, the carbon neutrality, and such kind of a image hasn't been built, in the consumer side. How do you see that?
Yep.
Then the second question for me is the first result of the survey, which shows majority of the consumers think the network performance is good enough for them. Mm-hmm. So how do you interpret such a kind of a result? Because on the other side we see the networks still need kind of a expansion upgrade. So that's the two questions. Thank you.
Sure. So on the first, I didn't show it here, but we are seeing from other survey evidence that we've run that consumers are increasingly prioritizing their purchase decisions based on environmental and ethical criteria, which didn't used to be the case. So traditionally, most people have chosen an operator based on its cost and how much coverage it had. How good the network coverage was. Now it's very much shifted to be, is this company, so those matter, but is this company aligned with my environmental values? So we're starting to see more marketing efforts, particularly in the retail channel, around running a carbon neutral store or having products that are green certified. And I think we're going to see more of that from leading companies to cater to that mentality. On the second question, yes, I think most people, when you look at LTE, fundamentally that brought something new, which was video streaming. Nobody was able to do that before. That was genuinely new from 3G to 4G. There are those opportunities with 5G. My point there was, particularly when you get into mixed reality applications, that needs to be a widespread perception. And I think we're still early in that transition to make those use cases very visible. And as that starts to happen, I would expect to see that number sort of start to moderate. I think we got time for one more, and then I'll go to the panel. Yes, please, sir.
Hi, from Talaj. Just a quick question on sort of network evolution, because you were saying that Europe is behind other regions in the world. And in a sense, the US, for instance, went from 2G straight to 4G, quick transition, 2.5, whereas Europe went through 3G and then 4G and so on. So in a sense, if there's a 5-year cycle, we lost some time there. And is that the reason? Is that because we're not going to halfway through the business cycle of 4G, shut it down and leap to 5G? Is that why you perceive that, perhaps we're, and how far behind are we? A year, 2 years? What's your perception?
Well, so when you look at the rates of infrastructure investment, Europe does invest a lot of capital per subscriber. The US is higher, but Europe is very, very healthy. The issues are more in terms of the overall market structure, and Europe fundamentally generating a lower return on investment than American carriers. And that has been a challenge for the free cash flow that enables the network investment. right now, 4G coverage is ubiquitous in Europe and the US. 5G is where you see the difference. Europe it's hard to put a number in terms of how far behind it is, but when you look at the numbers, it's 50% compared to 95%. The hardest rates of growth are really when you get above sort of 85, because that's where you get to lower population densities and where the cost of coverage starts to expand disproportionately. But the next 2 to 3 years will be really important in bridging that gulf, because that's the ability to have the network coverage is ultimately the fundamental enabler for people using the technology. So that's why we're putting so much emphasis on the support to drive that investment in the near term. All right. Happy to take questions offline after. I know we want to get to the panel, so I am going to hand it over to Jennifer Baker, who will come up and introduce everybody else. But thank you very much.